Welcome back, everyone. Today, we're going to be diving into something called Security Plan and Life Care.
Doesn't exactly roll off the tongue, does it?
Not really, no. But the document we have here, it's a product spec, suggests it could be interesting. It's like we've got the blueprint for this financial product, and we're going to figure out how it works.
Ooh, I do love a good blueprint. And something with a name like that. Bound to be full of surprises.
Okay, so getting into it. It turns out that Security Plan and Life Care is actually a type of term life insurance. So that means you're covered for a specific period and it renews annually. But there's a bit of a twist with this one. This one has profit sharing built in, so you could actually make some money back based on how well the product does.
That's unusual. Most people think of life insurance as just purely for protection, not potential earnings.
Yeah.
This suggests they're trying to appeal to a different type of customer, maybe someone more financially minded.
Yeah. And it's only for the main policyholder, not a couple or family. So let's break down what you actually get with this plan. First, there's the death benefit, pretty standard with life insurance. If the policyholder passes away, the beneficiary gets a sum of money.
The cornerstone of any life insurance policy. It's that financial safety net for loved ones.
Absolutely. Now, they also have this optional accidental death benefit. If you die because of an accident, the payout doubles, up to like a limit of US $30,000, but it stops when you turn 70.
Interesting, adding that age limit there. Maybe they're targeting a younger demographic, where accidents are statistically more of a risk factor.
Yeah. Now, here's a really interesting little detail. They've got this thing called a funeral rider, which pays out US $500 immediately when you die to help cover those expenses. But it's got this 3-month waiting period before it kicks in. What do you make of that?
That waiting period could be there to deter people from signing up if they know a funeral expense is coming up soon, like a way to protect themselves from people taking advantage.
It really makes you wonder how often that happens, for them to put that rule in. Okay, so now on to the part that really caught my eye, which is what they call loyalty benefits.
Okay, so that's where the name Security Plan and Life Care starts to make a bit more sense. Not just about coverage, but rewarding you for staying with them.
Right. They've got 2 of these loyalty benefits, cashback and a profit share bonus. Cashback is pretty simple. You get 15% of your annual premium payment back every year as long as you're still alive.
A little incentive to stay on board. It would probably appeal to people who like getting something back regularly.
Yeah. But this profit share bonus, that's where things get a little more complex. You earn points based on how much you pay in and how long you've had the policy. Those points then determine how much the product's mortality profits you get.
Mortality profits. Now, for those who aren't familiar with that term, what does that actually mean?
Oh yeah, good point. It's essentially the profit the company makes from the difference between what they collect in premiums and what they pay out in death benefits. Basically, it's the money they made when people live longer than they initially anticipated.
Right. Bit morbid to think about, but that's kind of the reality of the business, isn't it? So they're actually sharing some of that profit with policyholders. That's quite unique.
Yeah, it is.
And what's really interesting is they actually show you the formula for calculating this profit share. It includes like reinsurance costs, claims that are paid out, any changes to reserves, even taxes.
I know. You're not just trusting that they'll be fair, you can actually see exactly how it's done.
Exactly, yeah.
And to be eligible for this profit sharing thing in the first place, you have to have paid premiums for at least 3 months straight. And you can't have made any claims on the policy.
Oh, so they're really looking for those long-term customers, the ones who are going to stick around to share those profits. Not a quick in and out situation. It's very different from, your typical life insurance where you just set it and forget it.
Yeah, totally. I'm almost more curious about WHO this is actually designed for than anything else at this point. But let's go through some of the finer details, shall we?
Let's do it. The devil, as they say, is in the details.
Okay, so the smallest amount of coverage you can get is US $3,000. The maximum depends on your health and finances. The healthier and wealthier you are, the more coverage you'll be offered.
Right, that's pretty standard. They have to assess the risk of covering you, and that determines how much they're willing to cover.
The triggers for getting any money are pretty straightforward. Death, obviously, that triggers the death benefit. Each year, on your policy anniversary, you get that cash back. And then at the end of each year, that's when the profit share bonus gets calculated, assuming the product was profitable. And they also give you the option to increase your coverage over time to adjust for inflation.
That's a smart feature that ensures your coverage doesn't lose value as the cost of living goes up.
Exactly. Now, here's a couple important things to remember. You can't cash this policy in early. No partial withdrawals either. It's very much focused on long-term coverage.
Which makes sense for term life insurance, right? It's protection, not like a savings account you can dip into.
Right. And like we said before, there's a health screening involved, which gets more in-depth the more coverage you're going for. And they use reinsurance to manage their risk as well, which is pretty common practice.
Yeah, reinsurance is basically spreading the risk, allowing them to offer larger amounts of coverage without taking on too much financial exposure themselves.
Makes sense. Okay, now let's talk about what isn't covered. Like with any insurance, you have exclusions. No surprises here: suicide within the first 24 months, death because of war or criminal acts.
Yeah.
All standard stuff.
Yeah, that's all about preventing abuse and making sure the coverage is for legitimate, unforeseen events.
Right. But there's one exclusion that really stood out to me: natural disasters. That's not something you usually see with life insurance, is it?
Now, that is unusual. Most life insurance policies will cover death from any cause, including natural disasters. Makes me wonder, are they operating in a region where natural disasters are really common and trying to manage their risk exposure that way?
It's a very curious detail. It makes you think about who they're really targeting with this whole plan. And actually, speaking of that, they also have waiting periods for the natural death benefit payout. And it's different depending on how long you've had the policy.
Huh. That's an interesting approach. It's like a built-in incentive to encourage people to stay with the policy for longer, to get the full benefit. At the same time, it also minimizes the risk for the insurer in those early years.
Yeah. It's like they've got a loyalty program baked right into the policy. All right, so let's move on to premium information and the general terms of security plan and life care.
Okay, let's get into the nitty-gritty. The cost of this unique coverage.
So as you can imagine, your age determines your premiums. Older you are, higher the cost. And they also mentioned that premiums could be adjusted down the line. Just something to keep in mind.
Yeah, that's pretty common. Premiums can fluctuate based on a bunch of factors. Things like changes in average lifespan, inflation, even the insurance company's own experience with claims.
Right. You do have some flexibility with how often you pay, though. Monthly, quarterly, semi-annually, or just once a year. They also adjust those premiums to account for inflation, so at least your coverage is keeping pace with rising costs.
Yeah, that indexing is a good thing to have. Gives some peace of mind knowing your policy's value isn't being eroded by inflation.
For sure. And if you happen to change your mind after signing up, they offer a 30-day cooling off period where you can cancel and get a full refund.
That's a standard consumer protection. Gives you a chance to back out without penalty.
Exactly. However, if you miss premium payments, you've got a 3-month grace period before the policy lapses. If you want to reinstate it after that, you've got 12 months.
That reinstatement period is pretty strict. Could be another way for them to encourage people to keep up with those payments and maintain, a healthy pool of policyholders.
Interesting. It definitely feels like they've put a lot of thought into getting people to stick with the plan long term. So that pretty much covers the basics of security plan and life care.
It's a lot to digest. It's a very unique product, that's for sure. But there's more to unpack, right?
Absolutely. Stick around, because next time we'll be looking into the changes you can make to the policy after signing up. And we'll explore some of the bigger implications of this unusual financial product.
Welcome back. So I hope you've had a moment to kind of digest all that information about security plan and life care. It's definitely a product that keeps it.
It really is. A lot to take in, but that's what we do here, right?
Yeah.
Unravel the complexities and make sense of it all. Before we get too philosophical, though, we should finish going through the details in this product document.
Good point. We need a solid understanding of the mechanics before we start speculating on the bigger picture.
Okay, so let's talk about what you can actually change about the policy, once you signed up. Life throws curveballs, and sometimes your needs change and you might need to adjust things. So with security plan and life care, you do have some flexibility.
Flexibility is always a plus. What kind of changes are we talking about here?
Well, you can adjust the amount of coverage, up or down, which obviously affects your premium. Pretty standard stuff. You can also change your name or correct your birth date if there was like an error, update your contact info, things like that. Oh, and you can also change your beneficiary.
Okay, yeah, those all seem like pretty reasonable options. What about if you want to increase your coverage? I'm assuming that's a little more complicated.
You bet it is. If you want to go above and beyond what the company's standard inflation adjustments allow, you've got to go through more health checks. They want to make sure you're still a good risk, especially if you're asking for a much higher coverage amount.
Yeah, that makes sense. They've got to protect themselves, make sure they're not taking on extra risk by increasing coverage for someone whose health might have declined.
Right, so we've pretty much gone through this whole unusual life insurance product. We've looked at the benefits, the terms, those exclusions, how much it costs, even the changes you can make. What are your thoughts so far?
It's definitely a unique product, that's for sure, combining features we don't often see together. Now, the real question is, who is this actually designed for? And what does this tell us about where the insurance industry is headed?
Yeah, what is the bigger picture here? Who is the ideal customer for security plan and life care?
Well, that profit-sharing system, it's pretty complex, right? And all that emphasis on being a long-term policyholder, it makes me think they're going after someone who's financially savvy. Someone who isn't afraid of a little complexity and is interested in, potentially earning a return on their premiums.
It's almost like they're tapping into the investor mindset, but within the life insurance market.
Exactly. It's more than just basic protection. It's got that element of financial participation, almost like a hybrid product. And those loyalty benefits, the cashback, and the points you rack up for profit sharing, that really highlights how much they value those long-term customers.
It's definitely an interesting approach. Instead of just offering peace of mind, they're giving you a possible way to actually grow your money. And that transparency they've got with profit sharing calculations, that could be a big selling point. It builds trust and lets people make informed decisions.
Yeah, absolutely. It's very different from that just trust us attitude you often get with financial products. But we can't forget about the core parts of the policy either. The death benefit, the accidental death benefit, that funeral rider.
Right. Those traditional aspects are still there, providing that essential protection.
So maybe they're actually trying to reach a wider audience. Offer something for people who just want basic protection and also for those who are interested in a potential return.
It's a pretty smart strategy. It could broaden the appeal of life insurance and bring in people who wouldn't normally consider it. Do you think this product reflects any larger trends we're seeing in the insurance industry as a whole?
I think the insurance industry is going through a pretty big shift right now. People are a lot more informed these days. They want more transparency, and they want products that are tailored to their specific needs. One size fits all just doesn't cut it anymore.
They want choices, they want control, and they want a fair deal.
Exactly. And technology is playing a huge role, especially with all those insurtech companies popping up. We're seeing all these new innovative products and services designed to meet those evolving needs.
It's exciting to see how these traditional companies, like the one offering security plan and life care, are adapting. Maybe this product is their way of staying competitive in a rapidly changing market.
Yeah, I think that's a good observation. It really highlights the need for insurers to evolve and keep up with the times if they want to survive.
Let's go back to those unusual exclusions for a minute, especially the one about natural disasters. What are your thoughts on that?
That exclusion definitely raises some interesting questions. It could point to a very specific risk management strategy. Maybe it's tailored to a particular region or demographic or something like that.
Yeah, it's true. As natural disasters become more frequent and more intense around the world, insurance companies have to reevaluate their risk models, right? They've got to adjust their products accordingly. Maybe this exclusion is a sign of that.
Yeah, it's a reminder that climate change is having a very real impact on the insurance industry. They've got to figure out how to deal with the financial consequences of these increasingly frequent disasters.
It brings up some important questions about how affordable and accessible insurance is going to be in the future, especially as climate change continues to reshape our world. But for now, let's bring it back to security plan and life care.
Agreed. We've talked about its unique features, the potential benefits, the drawbacks, and who it might be best suited for.
We've even touched on broader industry trends and some ethical considerations.
But there's one key piece of the puzzle we haven't really addressed yet.
What's that?
The price tag.
Oh, you're right. We've talked about everything via T, how much this policy actually costs. I guess all this innovation and complexity has to come with a price, huh?
Of course. And that price is going to play a huge role in whether this product is a success or not. How does it compare to traditional term life insurance options? That's the question, isn't it?
Well, the document actually doesn't give us any specific numbers. It mentions those untested and tested rates, but no actual figures.
Yeah, those untested and tested rates usually refer to those actuarial assumptions that are used to calculate premiums. Untested could mean they're using more preliminary data, while tested rates are likely based on a much larger pool of historical information.
So it sounds like maybe they're still finalizing the pricing model, maybe waiting for more data before they decide on the actual premium rates.
It's definitely a possibility. The document also mentions that premiums are going to vary based on age and the amount of coverage, which, like we said, is pretty standard. The older you are, the more coverage you want, the more you're going to pay. And it also mentions that they might tack on extra premiums in certain cases.
Right, those extra premiums would probably apply to people who have pre-existing health conditions or who engage in risky activities, as a way to adjust the price based on individual risk factors.
Exactly. So even though we don't have specific figures, we can probably assume that the cost of security plan and life care will be influenced by factors like age, health, how much coverage you want, and potentially even your lifestyle.
Makes sense. So we can't really say for sure how this product's pricing stacks up against traditional term life insurance. How important do you think that comparison is going to be for potential customers?
Oh, I think it's going to be a key factor. People might be willing to spend a little extra for those unique features, the profit sharing potential, all of that. But if the price is way higher than traditional options, that could be a deal breaker for some.
It all comes down to that value proposition, doesn't it? Do those potential benefits and unique features justify a higher price?
Exactly. It's a question each potential customer is going to have to ask themselves. And without those actual premium numbers, it's really hard for us to say for sure.
Yeah, I guess that's part of what makes this deep dive so interesting. We can analyze what we do know, but ultimately, some of those questions are going to remain unanswered. It's up to each individual to weigh the pros and cons and figure out if it's the right product for them.
Right. And that's always our goal with these deep dives, isn't it? To give people the information they need, get them thinking, and empower them to make those informed decisions.
Absolutely. So for anyone who's intrigued by security plan and life care, the next step is to contact the insurance company directly and get a personalized quote. After all, the decision to buy any financial product, especially one this unusual, is a very personal one. It takes careful consideration, weighing those potential benefits against the costs and the risks involved.
Well said. As always, we encourage everyone to do their own research, talk to a financial advisor if they need to, and make the best decision for their own unique situation.
Until next time, fellow deep divers, keep exploring, stay curious, and thanks for joining us on this journey. All right, welcome back for the final part of our deep dive on security plan and life care. We've gone through the benefits, all those unique features, even potential downsides. But as we all know, things get real when we start talking about cost.
Absolutely. It doesn't matter how great something sounds, right? You've got to be able to afford it.
Exactly. So let's try to figure out this whole pricing mystery surrounding this life insurance plan. What clues does this product document actually give us about how much it might cost?
Well, the document itself doesn't actually give us specific premium numbers, unfortunately. It does mention untested and tested rates, but it doesn't go as far as to give us concrete numbers.
Okay, so what does that even mean? What's the difference between untested and tested when we're talking insurance premiums?
It usually has to do with the actuarial assumptions behind the prices, Untested rates might be based on preliminary or less reliable data, while tested ones are usually using a bigger pool of historical information, more solid data.
So maybe they're still kind of tweaking the whole pricing model, gathering more data before they lock in those final premium rates.
Could be, yeah. It's also worth noting that the document says premiums will be based on your age and how much coverage you go for, which is pretty standard in the industry. Older you are, more coverage you want, higher the premium. It also mentioned they might add extra premiums in certain situations.
I'm guessing those extra premiums would be for people who already have health conditions or do things that are a bit riskier, right?
Exactly. It's how they tailor the price to each person's risk. So even though we don't have exact numbers, we can be pretty sure that the cost of security plan and life care is going to depend on things like age, health, how much coverage you want, maybe even your lifestyle.
Got it. So basically, it's tough to say for sure how this compares price-wise to more traditional types of term life insurance. How important do you think that comparison is going to be for people thinking about getting this?
I think it's going to be a big deciding factor for a lot of folks. I mean, some people might be willing to pay a bit more to get those extra features, like the profit sharing. But if the price is way higher than regular term life insurance, it might not be worth it for some.
So it all comes down to value, right? Does this security plan and life care give you enough extra to justify paying more for it?
Exactly. That's a question everyone's going to have to answer for themselves, and it's hard for us to say without seeing the actual prices.
Yeah, I guess that's part of what makes this deep dive so interesting. We do all this analysis, but we're still left with some unknowns, right? It's up to each person to really look at the pros and cons and decide if it's right for them.
Absolutely. And that's what we always aim for with these deep dives. Give you the information, get those wheels turning, help you make the best decision for you.
Well said. So for anyone out there who's really intrigued by Security Plan and Life Care, what should they do?
The best thing to do is reach out to the company and get an actual quote. See what the price would be for your specific situation. And with everything we talked about today, you'll be in a good position to ask the right questions. Make sure this product really aligns with your goals and your risk tolerance.
Great advice. And of course, remember, buying any financial product, especially something like this, it's a big decision. It's a personal decision. Take your time, weigh those benefits against the costs, consider the risks.
Couldn't agree more. Always a good idea to do your homework, talk to a financial advisor if you need to, and make the decision that makes sense for you.
Well, that about wraps up our deep dive into Security Plan and Life Care. Hopefully you've all learned a thing or two and maybe even sparked some of your own curiosity.
As always, it's been a pleasure exploring these complex topics with you.
Absolutely. To all our listeners out there, stay curious, keep exploring, and thanks for joining us.